I think we are live, or at least we should be live. If you guys can see this, just quickly do let me know. And, well, we have ourselves a few more minutes until the data comes out, which I think is going to be a very, very interesting situation. So I'm going to quickly wait for everybody to hop on in, and then we shall talk of what's going to happen in the very near future, because things are about to get very, very serious here, ladies and gents. It's a very interesting situation. Let's see, where you guys at? Where you guys at? All right, so we have, let me quickly press this show comments button. There we go. We've got Chelsea FC. We got Aaron. We got Marjan. What's up, G? We got Bod. We got everybody. So today, long story short, the day where most likely a massive rate cut is going to be coming. And if it does, it's not necessarily the biggest of deals because there's only 25 base points. But there's, of course, a small probability it's going to be crazy. I don't think so, though. I don't think so. But there's also the possibility of no rate cut. It's only very small. It's only like, what, 3%, 5%. If it does happen, though, we're going to have ourselves a freaking blast, all right? That's going to be some carnage in the markets, ladies and gentlemen. I'm telling you right now, if that were to happen, our coins, our stocks, nothing will do well. As it currently stands, main stocks in a pretty neutral spot. Dollar index not doing too amazing, but generally speaking, markets in a pretty neutral spot, slight downturn. Of course, that is nothing too crazy, nothing too fancy to write home about. XRP, let's quickly take a little bit of a look at what this looks like right now over on the 1 minute, just for fun. We've already seen a pretty interesting spike a few minutes ago. Matter of fact, a little bit earlier, I noticed a lot of our coins saw a pretty big uptick, at least Ethereum. All of a sudden, wait, even just right now, Ethereum back above 3,400. Quickly show you guys that as well. Here we go. Ethereum back above 3,400. Bitcoin at 92.5. XRP at 207. Solana at 138, something like that. So some pretty interesting debacles, some pretty juicy numbers we're seeing right here. And so for all of you that are wondering, we've got ourselves the Fed speech in roughly 38 minutes and this decision in roughly 8 minutes or so. So everybody, if you're watching this right now, make sure you go ahead and press that like button. And also, we have our boy in here. I'm going to put you on the screen right now. Here we go, my boy. Are you here? Arnold?
Yes, I am here. Can you hear me?
Yes, we can hear you right and clear. Because in about 7 minutes, we're going to be getting ourselves this data. And of course, you're the man of the data. So it's always nice to have you in here to get your thoughts on what a rate cut might mean or what you think it might do to our coins, our precious charts, our precious coins. Because for me, I'm being honest with you, I don't know if this is going to be the biggest of deals or if people are already selling off in preparation for it. What do you think is happening to the markets, my boy?
Well, I think I'm going to have to agree with you on this one because it has been quite clear so far that we're going to have a rate cut. So it's most likely going to be 25 base points. And, you know, it's not really a surprise. The surprise effect is completely gone. I think the only like crazy spike that we could have in a bullish way of sense is if we're going to see 50 base points being cut. But yeah, there's certainly a very gnarly scenario awaiting us if there is no rate cut at all. But again, these odds are very, very low. All in all, from a technical perspective, could you just pull up my chart on the screen, Dusty?
It's on screen.
All right, perfect. Because from a technical perspective, we're still in, let me just zoom out. We're still
somebody says sounds like you, Dusty, but with a voice changer. Interesting.
Yeah, he's actually I'm an AI. You know, you folks have said it before. I'm AI. I'm not real. I'm a very sophisticated AI.
I'm gonna let you speak in just a second. Let me quickly say, hey guys, if you're watching this chat right now, first of all, which country are you watching from? We always ask that whenever we start up a stream, so I'm gonna have to ask it here as well. And second of all, right? So we got some delivery over in here. But I was gonna say, also for all of you that do not know, this is a stream where every single person has to give a little vote. And so, for example, right now, I really am wondering, out of all of y'all, How many of you think that a rate cut is already priced in versus not priced in? Because again, we're going to be getting ourselves that data in roughly 5 minutes. And the question now becomes, priced in, yes or no? If you mean, or if you think yes, there's a very good chance that if the data obviously is already priced in, that we're just going down from here forward, right? If the answer is no, that could potentially mean that we see a pretty juicy pump based on this data, which again is coming out in roughly 5 minutes. And again, it also begs the question, is a 25 rate cut, right, 0.25%, is that enough to give the markets a good boost, or if it's too little? And I muted your mic, good sir, but if you need to talk again, you can quickly unmute your mic. So yeah, when you're back in town, I'm mute. There we go. Let's see. Can you talk again for a sec?
Hello, hello, hello.
Yeah, they can hear you right there and clear.
All right.
And yeah, let's quickly see the chat.
So
people are saying 0.25 pointless cut should be fine. You do you.
A pointless cut. Well, that's the whole point that we're trying to make here. So we kind of agree here with each other. But just from a technical perspective, because we are still in this huge range that we have been discussing for quite some time right now. And one peculiar thing, and it's a general rule to follow, most of the time, price is going to pull back to the 200 EMA at one point. On higher time frames, of course, this can be a longer period of time that this happens. And actually, the last time that we pulled from the 200 EMA has been on the 7th of October. And ever since, we have just been trading in this range, apart from the Elliott wave count. So it's just completely isolated from that. And I'm just stacking another confluence why I believe we are at least going to touch the 200 EMA either tonight or in the next coming week or weeks to come, because that's my minimum December target, actually. My minimum December target is the 200 EMA. And that's purely a base point right there. So that being said, could you just give me 1 minute, Dusty?
Sure. All right. So in my opinion, that being said, and this is again my personal thoughts on the matter, man, you know what? Matter of fact, it's only 2 more minutes until we have the freaking FOMC decision. Ladies and gents, this could be interesting. Are you guys ready? And they're saying, get your food, Arnold. Run, brother. I always say, they can't wait a bit. Just put the food in front of the door. It's okay. If you don't answer, they'll just put the food down and they'll run away, right? It's not like that, nothing. But it doesn't really matter. Well, we've only got 2 more minutes left, ladies and gents. 2 more minutes. As a matter of fact, maybe even closer to 1 more minute. This is going to start loading in. And then about 30 minutes, like I said, before the actual speech. So again, I'm going to remind you, 2 minutes till we get ourselves the rate decision, so the amount of cut or whatever, and then about 30 minutes until he goes live and there's a speech going. So make sure, if this is something you're interested in, just stick around for a little bit. And I'm checking through the comments right now of what you guys are saying. Damn. All right, boys, 1 more minute. Now your final predictions. Put them in. Brother, every
I'm
time
still
I'm
gonna
not sure if
say
you talk,
bullish.
Brother, if you come in and you go away, you have to always unmute your mic because I'm gonna always mute it. Just so you know, boss. Now I'm muted.
All right. Thank you very much. So all in all, guys, I still believe there is enough bullish sentiment, even if we don't have the type of reaction that we want today. Minimum target still stands. So my prediction will be also 25 base points cut. So that being said, let's load up the show, ladies and gentlemen.
I mean, show it's, I guess, yeah, you're right. Here we go. Somebody says whole point down. All right, all right, we got a few more seconds. It's going to start loading in here. I'm going to also, I'm going to also open up Twitter to see if anybody's even faster. All right. United States monthly budgets to, how does it report this? We don't care about that one. And
all right.
3.75, here we go.
A lot of movement.
0.25. Ooh, look at this. 1 minute chart for XRP here. Slightly up. I guess we can call it slightly up. Let's put up Bitcoin here as well, just for fun.
It's a humble beginning.
It's a humble beginning. Back to 93. Okay. So in the last few minutes, it's up what? 1 point something percent. Just looking around here.
Quite calm as of now. Just scrolling through crypto market.
Okay, I was looking around. All right, nobody's saying anything too crazy. We have ourselves a little, I almost wanted to say a term I shouldn't say. We had ourselves a little fake out here where markets all of a sudden up what? How much percent? So XRP here is up 1.2% in 1 minute, came right back down. Bitcoin's up 1 point, something like that, came right back down. And right now the show can start. Why? Because this is actually, in my opinion, quite good. All right, this is actually quite nice from the perspective that most of us expected it to be priced in, and the markets actually dropped when the data came out because it's not something out of the ordinary. The fact that it's still kind of stable here, going sideways, with actually a slight pump at the start, could mean something nice. However, you have to remind yourself that the real crazy thing mostly happens during the meeting itself, and now that the rate decision has come out. Because now people are going to start thinking about, oh, okay, if that was it, then what's next? And that's what we're hoping for, that we're not going to see a massive downturn in the crypto markets as the speech comes closer and as he actually starts speaking about what's going to happen in the near future. And I honestly think, guys, we have about 28 minutes here to see the action, I'm going to call it, to see what the numbers are doing. And in the meantime, we'll just quickly talk about some of the things that have happened. For example, here, just a few minutes ago, we had this new announcement coming out. Trump's family's American Bitcoin shares a video comparing Bitcoin holdings to GameStop. This is now the 22nd largest Bitcoin treasury company. And I find it interesting how people are so negative on these coins right now, based on rate cuts, etc. When in reality, we've got the president and all them just hoarding these stuff like never before, which I think is just the funniest thing ever. So you guys are saying, check out gold. Let's take a look at gold then, I guess. This is 433. There we go.
Yeah, it looks quite interesting, actually. It's almost the same. We're just coming down right now.
Ooh. Okay, so how much is that of a pump at the start? 0.5%.
Nice
obviously, it's obviously way more significant for something like gold.
Yeah.
Yeah, 0.45.
But still, I guess it's not what people hoped for, obviously. But as we have spoken briefly at the beginning, the surprise effect has worn off, basically.
Beat says, if he talks dovish about quantitative easing and future rate cuts, we could see a more massive move.
Yeah, definitely.
Rate cut is damage control to not lose sentiment in the market. It's not going to fix anything. Well, if you're saying about fix anything, what should it be fixing, Nico? Like, what do we want? Too late, Powell doesn't want to cut rates. I understand he was outvoted. 0.25 coming, even though it should have been 0.5. When he has gone, we will get a full point. Bye-bye, Powell. I mean, I don't know if we want a full point at this point, but...
that would be crazy. But
that would be the craziest.
Panic mode,
If we get a full point, that would be a funny freaking day, man.
Yeah.
So let's see
but I understand what Nico was trying to say, because the whole sentiment in the global markets, not just the crypto markets, extremely, I wouldn't say negative, but extremely careful in regards to what the future brings. A lot of people are also screaming stagnation, or the whole market is going to have another crash, But I don't feel like it's like a political move or like damage control. I don't feel like it is. It still makes sense with the data we received earlier, that rate cut had to occur. Because, for example, let's have a scenario where Powell was voted out before today, and then Bessent would come and he would put like a 0.75 75 base points cut. You know, it would have just shown that if you're going to make drastic decisions like that, I think that would cause more panic than good. Because then it says, okay, now here's somebody in power who is more aggressive when it comes to cutting rates. And I think for every market, you just want to have predictability. And when there is no predictability, then investor sentiment is going to go down eventually.
That makes sense.
And that's my non-financial advice.
Yeah, at the end of the day, nothing we say here is financial advice. The only thing I'll say is, ladies and gentlemen, if you've not done it yet, there's always going to be the first link in the description down below. That's a link for the platform that we're using to trade on. Right now, we always have a couple of crazy trades open. And a matter of fact, what I think could also be interesting is that we just, every single time a massive event like this happens, we just do whatever the chat says. So if it's, for example, 50% of the people say, yeah, let's go long, we actually open a long, and if 50% of the people, or more, say short, we short, and we can actually see if chat is wise or stupid. The last time I did it, it worked out pretty well. But recently, every single time I did it, it's been pretty... I changed my mind. I'm looking at it now, and actually, matter of fact, the last trade that we opened together was a $1,000 Bitcoin trade. It's actually at a $60 profit. So apparently you guys are actually freaking geniuses, because I forgot we opened this up. The rest of the trades are not looking as juicy right now, but give it some time. I think these will also bounce right back. It's just minus $200,000 right now, but it's okay though. At the end of the day, I think this will all be all right. And here's the funny thing, right? I always say it like this. I personally think these will turn into massive amounts of profit over a little bit of time. And I always say that if you're looking at this and thinking, oh, that's really, really bad, remember, you're getting yourself, in this case here, a 20% almost lower entry than what I got for example, XRP, or a significantly lower entry, for example, for HYPE, like 33% or something like that. And from that perspective, not that bad to potentially get started. Again, not my own, not advice in that sense, but these are my own 2 thoughts, or my own 2 cents. And the same I have for all those bots I've got running. Let me quickly see how many of those are at a loss. I don't think as many right now. Oh, we can't actually see them right here. So for some reason, it's not opening up. I was going to say, always remember in the back of your head that you are officially getting yourself a better rate than whatever I was able to get if they're down tremendously, which I always say is a pretty nice situation, right? Right now, as we're talking about it, though, the market is moving interestingly, though. You have any thoughts on gold, my good sir? Like, look at this. Massive pump, little dump, right back to entry, basically, and then continuing on to blaze.
Yeah.
This is like the most fake out looking move ever, huh?
Yeah, it looks sketchy, but again, as you said, the real volatility is going to happen during the speech. It's going to sound dovish or not, etc. But yeah, it's looking typical, I would say. It's none of the ordinary right now, just a typical fake out. And then a good old pump, but in the end, if stocks and crypto is going down, but gold is going up more aggressively, I wouldn't say that's necessarily a good thing. Of course, for the ones who are investing in gold, congratulations. But all in all, I'm careful. I'm still careful. But
we're pumping.
Still optimistic. It seems like XRP is also coming back up. It's also good. Bitcoin is always looking a little bit the same. Just adding another one. I see silver. Yes. No.
Think of which one is nicest to look at silver on.
Capital.com is pretty safe,
so
I guess. Yeah.
Silver also having a field day.
Yeah.
Exactly mirroring gold, by the way, like to the dot.
Yeah, that's insane. Even on the 1 minute chart, it looks pretty damn similar.
Then again, XRP and Bitcoin also look very, very similar in their own respective fields. With a slight pump there, slight correction. Slight pump there, slight correction, slight pump again.
Yeah. But I feel like the last couple of months, there hasn't been a real divergence between like Ethereum, XRP, and Bitcoin. I think they're all moving a little bit the same as of now. I can't really tell if that is like a positive thing or a negative thing, but I think the era that, for example, XRP can pump with like 500% and Bitcoin is like stable. I don't think we're not going to see that era for quite some time. But I guess you never know.
You never know. You do indeed never know. Interesting how it's bouncing back right now as well. And yeah, it makes me think of what I said earlier, which is why, when you think of all this stuff, even if you're a fan of this buy the rumors, sell the news idea, would you sell into it? Like, I seriously, this is a joke. I was going to show it, but I thought maybe better not to joke about these type of things. I was going to say, why would you ever, regardless of everything, think of selling everything based on the idea that it's already priced in, when you've got announcements like this right here with the Trump family just as an entity collecting so much freaking Bitcoin, so many freaking coins. And you would say, yo, well, because maybe they're wrong. Yeah, but most likely not, because they're the ones kind of in control here of at least making the US do as much as possible. And so when I think about it from that angle, I'm like, why would I sell here? Like, why would I get rid of all my coins in a moment like this? It feels like it's not the right move to make. By the way, gold is actually having a pretty nice uptick here, up roughly $20 or something like that already. Silver's having a nice uptick here. Bitcoin's still quite neutral, but we're getting close to 93,000. XRP also still quite neutral in comparison to where we were a few hours ago. We're still at 207, so nothing too fancy. Still, the speech is going to happen in roughly 19 minutes from now. 𝗕𝗓𝗪𝗔𝗏 says, Dusty, we need a pump so I can come meet you for lunch. I need a vacation. Brother, every single day I look at these coins, I think, damn, we need to get some move on, all right? We need to finally get a bit more exciting. And then you know what happens? We do absolutely nothing. Yes, ladies and gentlemen, that's the day of my freaking life, all right? Every single day I look at this, you get more and more depressed. That's not really depressed, but you get more and more in the line of thinking of, what if it never happens again, huh? What if it's just going to stay boring forever now from here on forward? I think that's what
absolutely not going to happen. Absolutely not.
That would be so fun.
You got to have yin and yang over here, remember. You got to have the doomer and the optimist.
I'm not a doomer, brother. Literally.
Sounds pretty damn dooming to me.
Brother, I'm as balls deep into this stuff as you can imagine, all right? There's literally no more length left. There's no more PP left to go even further. I'm as far as you can go. I believe in this crypto stuff.
I need more.
I'm in this crypto stuff as much as I could humanly, physically, emotionally be. There's nothing more I could do, even if I wanted to, right? Which I kind of want to, which is why I'm doing it. There's no more I could. So all I can do is just wait for
sell your liver, you know?
I mean, I could sell a kidney, I guess. I don't know.
A kidney.
Liver, no. I don't know if I want to sell my liver, brother, but
I think that's a one-way operation, but I'm no medical expert.
If you think about it, I could sell it, put everything into my coins, then try to buy another one. I guess I have a very short amount of time, though, so maybe it's not so smart. Somebody's saying, we need to Dusty pump it up some. Brother, I can't go for an optimistic pump it up song when the coins are just going slideways. Like, that doesn't properly work.
Slideways. That's a new one for me.
Oh, shit. What is this guy? Who is that? Oi. Let's see if I got to also keep refreshing this. I remember that last time we had ourselves a bit of a issue with the stream.
I don't know. That guy looked like he irons his underwear for some reason. I don't know.
You don't iron your underwear?
Absolutely not.
I'm always butt naked in my room. I know it's shocking to you, but not for my mate back in California. She found out the hard way. What is the matter, Dusty?
Nah, don't worry about it, brother. You just... All right. Whatever. So somebody's asking how much did they cut rates? As expected, 0.25, right? 25 base points. So right now we've gone from 4 to 3.75. And the question is, in the speech in about 15 minutes from now, what are they going to be saying? How is he going to... A matter of fact, in prediction markets right now, you can put money on exactly what he's going to say at the start. Like, is he going to say, good afternoon, everybody, or something like this?
Yeah, but...
We're not touching that.
If he's already looking in a certain way while he says that, the market's already going crazy. This guy can literally sneeze and your stop loss is hit.
That'd be pretty something funny.
Yeah.
Imagine if eventually there'll be a thing for how many times does he nod his head or something like that, or how many times does he blink. That will eventually become a category as well. How many times does Jerome Powell... How many times Jerome Powell blinked during his speech?
These things are getting out of hand, honestly.
It's going to get interesting. How much money would I put on that? That's also a good question. Hey, for everybody watching right now, we've got 260 people in. How many likes do I have pressed? If you've not pressed that like button yet, make sure you do so. You've got nothing to gain except for just a little, like a tiny, tiny smile on my face. Not even a big one, right? But it's going to have like at least like a minimal, like, you know, the most forced fake ass smile you can imagine. You'll get that from me. So make sure you press that like button. It doesn't matter how many there are. It's still not enough.
If we don't have 150 likes by the end of this, I will come with my chopper. I will find you. 100% sure.
Cuffing Powell. Cuffing? You mean like cuffing as in how many times he cuffs?
Cuffing, yeah.
This one, huh? Yeah.
That's what cuffing means, you know.
I thought maybe like cuffing him up, you know, like you cuff him, like you get him back, you send him to jail. You know?
Well, and my stop loss is definitely gonna get hit.
Imagine, just Trump goes, no, today, no more. No, it's too little. Somebody says, wait, you can sell your liver for crypto? Why is this the first time I'm hearing about this? Well, it's a very short-term procedure.
Yeah.
All right, you're gonna have to buy it back like within a little while. But I guess you can probably live off of that for like a little bit. Not
It
long
depends
at all.
where you
Probably,
live, I guess.
I guess the hospital.
Yeah. You know, walk there with a lot of pain and a big scar, but you know, you can 50x Bitcoin. Why not?
You know, I want to get. It's a double-sided thing, you know. Either you make it, you buy your liver back, and you're happy, or it's going to be a slow. I was going to say, well, if it goes bad, I mean, you know,
like in a pawn shop, right? You could just put it.
That's
there
exactly what I'm thinking. You could kind of pawn it away. And if it goes bad, I mean, you may as well just ride it out, right? Live your last few days with no. Matter of fact, at that point, you can put all. I wouldn't recommend this, by the way. This is not advice at all. This is this is counter advice. Do the exact. I should. Don't do this at all.
Don't do this. Yeah. Only leave
Sell
this to
your
the
liver.
professionals.
Get some money.
The starch.
100x long. If it goes well, buy your liver back. Live a happy life. If it goes bad, accept fate, and have a few more days.
Just what can I say? Just give your son the next chance in life, or your daughter, whatever. 'Cause your life is gonna be over. Does he use starch on his underpants when he irons?
I think starch in your pants is actually quite nice.
And that, Matt, you know, that's why we are different. You know, I'm a real man. Again, from the mountains of Austria. And we don't do that stuff. We walk around butt naked in the Alps with beer.
Is this stream right here on the official Trading Economics website? Is it just playing like an old? It's just playing the previous thing already, just so people are watching, right?
October, yeah.
So this is just playing the old one on repeat. You guys can't hear it for right now. I'm gonna change it in a second, but I think. Ooh, look at this. The Dow Jones extended gains, rising about 300 points, while the S&P added 0.3%, and the Nasdaq hovered near the flat line on Wednesday. The move came after the Fed cut the rates by 25 base points. All right, so Dow Jones saw some nice gains. 300 points, that's pretty good.
My portfolio is still, flag of Japan.
Call of the Search, I'm here. Welcome, Bobby. Welcome back. It's been a while, but I'm happy to see you. So we've got about 10 more minutes until Jerome Powell's speech is here. And then we shall see if this is a beautiful or a very, very negative day.
Jerome, are you going to give us an early Christmas present or not?
Probably not, but UAE interest rate decision reported at 3.65, previously at 3.9. So also a cut of 0.35. Actually, what is the thesis behind that? Why is it in the U.S. like always these specific numbers, like 25 or 50 or 1, I guess? Why not?
I guess because it's more predictable, so less like impact on the market. So you cannot put like more than 50, right? Technically, has there ever been like a bigger rate cut than 0.5? I'm not sure actually.
Ah, this I cannot do, huh? Okay, I cannot put more than, I can look at 10 years.
10 years should be good.
0.5. Oh yeah, 1% here back in 2020.
I was during COVID, right? Yeah.
0.5. I have no way to see the older stuff. So.
Yeah, but we saw 1%,
So it's happened, yeah.
Yeah.
An increase? I don't know what the biggest increase has been. I guess also, oh, here, 0.75 as well in 2022.
So the war in Ukraine just started.
0.75. May of 2022?
Oh, no, February. So it's like
Okay,
when
so
the
before
sanctions
even, yeah.
kicked in. So the whole world economy was in chaos.
All right. So we have 9 more minutes left until Mr. Powell's speech. And, well, yeah, I mean, realistically speaking, every single thing he says could move our coins. Just being honest with you, every single thing could be really, really interesting. And right now, as it currently stands, we're still quite neutral with a slight upward bias, at least for Bitcoin and gold very much so, silver very much so. But XRP is mostly sideways, slightly upwards. Nothing too crazy, though.
Yeah. But if we, could you just pull up my chart for 1 second?
All right, we got that coming in. There we go.
Thank you very much indeed. If you can see, we're really, really sideways also on the higher perspective, higher time frame. And we're actually coming to an end of that. So price is increasingly squeezing tighter. So expect a big move in the coming days. Can be even during the speech, after the speech, etc. But you see that price is increasingly squeezing. And even if we zoom out further, this is all still one range, even from this point. And if we just zoom out even further, it's the same story. But now if we, if we just zoom in right here, this move is nothing. It's just sideways, boring. But as I've said before, and also in all the TA analyses that you can find on Twitter, is that what happens when price is going sideways? And now this is sideways on a higher time frame, because I can bet you if I, for example, take a 1 week time frame, or maybe something less, because this is extreme, that this is extremely sideways. So what happens when price is going sideways? It means it is charging up for the next move, for the next impulse. Of course, this impulse can be bearish or bullish, but it's already significant enough to understand that there will be a big impulse. And with all the bias and all the confluences we have discussed over the past weeks and months, and including today, I still believe that the breakout will be indeed bullish towards the 200 EMA. Well, that's purely from a technical analysis perspective. So that is that for now. I think we have 7 minutes left, Dusty.
Somebody said 8 minutes till I have to fill out my McDonald's application.
There's nothing wrong with McDonald's, brother. Puerto Rico here, Dusty. Welcome, Jordan Sanchez.
Yeah, we got a big chat, like a lot of different people here across the board. Most likely, I mean, this right now is a pretty late stream relatively for us, right? And again, guys, if you're wondering, we're going to be streaming most likely every single day again. So just tune back in. And we took a break for, I think, about like 5, 6 days or so. Something like that. We had some YouTube issues, but right now, right back into the freaking grind. So make sure you tune back in every now and then, because why not? It's going to be some good freaking times. And right now here, I'm just, again, going to refresh this. I'm just waiting.
Get to the chopper.
We have still 5 more minutes to go. And you don't know, it's like a freaking, all right, this thing is a jam, all right, if you don't know. The song that they've got playing on here is a freaking banger, but you don't want to hear it, because I think they'll strike my video down if I play this freaking song. So let's not do that, but it's going to be nice. I've got about 5 more minutes left. I'm also in the middle with what I really think is going to happen. Realistically, it's and the reason I'm saying that is because of Trump. Trump has been pressuring this man so freaking hard for so long that I keep thinking, no, he can't sound any way negative, right? He has to just be like, yeah, we're gonna pump this thing to the freaking moon. We're gonna go crazy. We're gonna cut even more. Of course, I want to cut. But then again, his own personal opinion seems to have been that no cuts are necessary, or matter of fact, that they should not cut. So I'm a bit in the middle as to what I think here.
I mean, the thing is, though, there is no way Trump is gonna fire Powell. Because all what he, from a political perspective, you know, I don't want to get too deep into this, but he wants a good economy for the midterms. Obviously, Democrats, Republicans, whoever is in charge wants this. So it's going to be a huge gamble if he's going to fire one of the most trusted people the SEC has ever had. Did I just say SEC?
Yeah, you did. I was going to let it slide because I was like, you know what? You said it in the middle of the whole thing. So if you just kept like going on with full power and just said like Federal Reserve again and stuff, I was going to let it slide.
I think I could get away with it, but absolutely not. So from that perspective, it's going to be a huge gamble if you're going to, fire somebody who's been so trusted on the Fed, the head of the Fed. So I don't think he wants to do that. And people have been talking about it. He has been talking about it, and it's the wet dream of percent, But I don't think it's going to happen. But at the same time, I definitely think that Jerome is feeling some pressure here and there. But again, I think he's.
Wait! You said you think he's feeling some pressure, brother? This guy, Trump, is.
But he knows he's not going to get fired, so he thinks from his perspective. You can pressure me all you want, but I know you're not that crazy to actually do that because the consequences cannot be overseen.
You can never say that Trump is definitely not going to do it because this man has done some crazy things. And I don't know if we can say Jerome Powell has been the most trusted in that sense. I think
one of the most trusted. I wouldn't say that. That's just my personal opinion. But.
I would say that it's exactly the opposite. He's one of the most mistrusted because people say he's messing up the economy so bad. I think he's a trusted figure in the grand scheme of things. Like people, he's a very important man. But I wouldn't say that the general consensus is trust because of Trump's influence as well. They've been freaking dogging on this man for a long time. Hence the quote-unquote distrust. Which is why people say he needs to go because he's, let's not call him stupid. He's obviously extremely intelligent in a lot of ways, but perhaps making very stupid decisions.
The thing is, he's not politically aligned. And that is a stable monolith during this time where higher judges, etc., all have some political ideology at one point. And I think why I call him more trusted is because he is not aligned. Perhaps he indeed made some mistakes in the past here and there, and I don't agree with a lot of things that he eventually decided as well, but he's not aligned with anybody. And if, for example, a figure like 𝗫 is going to be there, and I don't care that he's a Republican or even if he was a Democrat or whatever, I don't think it's a wise choice to politicize the Fed. And that's my take on that, basically.
I do get you. Let me see, is there any way to... I'm just trying to move things around a little bit. Why not? As we are waiting 1 more minute, how much? About 1 and a bit more minute.
Yeah.
And at that point, I'm going to mute the mic, so we're just going to enjoy. Because I remember every single time when I say something, people are like, ah, don't talk over it. Well, I'm trying to hear that guy. So let me quickly...
That's what it is.
From now, my boy, you're going to go to the background. I'm going to change this thing real quick. And they won't be able to hear you because otherwise you'll hear it double, yeah? So
yes. Just one more thing in the chat, guys. Tell us where you are watching from right now. Not the country, but the place where you're watching from. See you in a bit.
Yeah, I mean, I guess we can still wait a second because it's only when I put the thing on the stage. But I'm going to prepare now. So you, brother, we shall see you in a bit. All right, let me put this to stage. Now we should be able to hear it. If not, I have to go through very quick loops. Can you hear that? Brothers and sisters, please let me know quickly if you can't hear that. Yes, okay. Why is it still... Okay, this song is slowly going out. Does it just keep unmuting it just to be sure? There we go. All right. Put in the chat box what you think the first words will be, ladies and gentlemen. What's the first thing he's going to say? This is going to be a very interesting one, huh? We're just waiting. And everybody, if you've not done it yet, make sure you go ahead and press that like button. Mr. Powell, here we motherfreaking go. I'm going to mute my mic. We're going to watch this. The first words, what's it going to be? Good afternoon.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although important federal government data for the past couple of months have yet to be released, available public and private sector data suggests that the outlook for employment and inflation has not changed as much since our meeting in October. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals, in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. As a separate matter, we also decided to initiate purchases of shorter-term Treasury securities solely for the purpose of maintaining an ample supply of reserves over time, thus supporting effective control of our policy rate. I will have more to say about monetary policy and its implementation after briefly reviewing economic developments. Although some key government data have yet to be released, available indicators suggest that economic activity has been expanding at a moderate pace. Consumer spending appears to have remained solid, and business fixed investment has continued to expand. In contrast, activity in the housing sector remains weak. The temporary shutdown of the federal government has likely weighed on economic activity in the current quarter, but these effects should be mostly offset by higher growth next quarter, reflecting the reopening. In our summary of economic projections, the median participant projects that real GDP will rise 1.7% this year and 2.3% next year, somewhat stronger than projected in September. In the labor market, although official employment data for October and November are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. The official report on the labor market for September, the most recent release, showed that the unemployment rate continued to edge up, reaching 4.4%, and that job gains had slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. In our SEP, the median projection of the unemployment rate is 4.5% at the end of this year and edges down thereafter. And excluding the volatile food and energy categories, core PCE prices since our meeting in October. Total PCE prices rose 2.8% over the 12 months ending in September, and excluding the volatile food and energy categories, core PCE prices also rose 2.8%. These readings are higher than earlier in the year as inflation for goods has picked up, reflecting the effects of tariffs. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have declined from their peaks earlier in the year, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.9% this year and 2.4% next year, a bit lower than the median projection in September. Thereafter, the median falls to 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by 1/4 percentage point to 3.5 to 3.75%. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. A reasonable base case is that the effects of tariffs on inflation will be relatively short-lived, effectively a one-time shift in the price level. Our obligation is to make sure that a one-time increase in the price level does not become an ongoing inflation problem. But with downside risks to employment having risen in recent months, the balance of risks has shifted. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. Accordingly, we judged it appropriate at this meeting to lower our policy rate by 1/4 percentage point. With today's decision, we have lowered our policy rate 3/4 of a percentage point over our last 3 meetings. This further normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2% once the effects of tariffs have passed through. The adjustments to our policy stance since September bring it within a range of plausible estimates of neutral and leave us well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of 2026 and 3.1% at the end of 2027, unchanged from September. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. Let me turn now to issues related to the implementation of monetary policy, with the reminder that these issues are separate from and have no implications for the stance of monetary policy. In light of the continued tightening in money market interest rates relative to our administered rates and other indicators of reserve market conditions, the committee judged that reserve balances have declined to ample levels. Accordingly, at today's meeting, the committee decided to initiate purchases of shorter-term Treasury securities, mainly Treasury bills, for the sole purpose of maintaining an ample supply of reserves over time. Such increases in our securities holdings ensure that the federal funds rate remains within its target range and are necessary because the growth of the economy leads to rising demand over time for our liabilities, including currency and reserves. As detailed in a statement released today by the Federal Reserve Bank of New York, reserve management purchases will amount to $40 billion in the first month and may remain elevated for a few months to alleviate expected near-term pressures in money markets. Thereafter, we expect the size of reserve management purchases to decline, though the actual pace will depend on market conditions. In our implementation framework, an ample supply of reserves means that the federal funds rate and other short-term interest rates are primarily controlled by the setting of our administered rates, rather than day-to-day discretionary interventions in money markets. In this regime, standing repurchase agreement, or repo operations, are a critical tool to ensure that the federal funds rate remains within its target range, even on days of elevated pressures in money markets. Consistent with this view, the committee eliminated the aggregate limit on standing repo operations. These operations are intended to support monetary policy implementation and smooth market functioning and should be used when economically sensible. To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing our inflation sustainably down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. At the Fed, we will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Howard.
Thank you. Howard Schneider with Reuters. Just first turning to the statement, just to be clear, we're on the same page here. The insertion of the phrase, considering the extent and timing of additional adjustments, does that indicate that the Fed is now on hold until there's some clearer signal from inflation or jobs or the evolution of the economy along the baseline outlook?
So, yes, the adjustments since September bring our policy within a broad range of estimates of neutral. And as we noted in our statement today, we are well positioned to determine the extent and timing of additional adjustments based on the incoming data, the evolving outlook, and the balance of risks. That new language points out that we'll carefully evaluate that incoming data. And also, I would note that having reduced our policy rate by 75 basis points since September and 175 basis points since last September, the Fed funds rate is now within a broad range of estimates of its neutral value, and we are well positioned to wait to see how the economy evolves.
And if I could follow up on the outlook there, it seems like with the additional GDP growth coupled with easing inflation and a fairly steady unemployment rate, this seems like a pretty optimistic outlook for next year. What's given rise to that? Is this an early bet on AI? Is there some sense of improving productivity out there? What's driving that?
So a number of things are driving what's happening in the forecast. And I would say if you look broadly at outside forecasts, you do see a pickup in growth in many of those now too. So it's partly that consumer spending has held up. It's been resilient, and to another degree, it is that AI spending on data centers and related to AI has been holding up business investment. So overall, the baseline expectation for next year is, at least at the Fed, and I think with outside forecasters too, is a pickup in growth from today's relatively low level of 1.7%. I mentioned that the SEP median is 1.7 for this year growth and 2.3 for next year. You actually, some of that is due to the shutdown. So you can take 0.2 out of 2026 and put it in 2025. So it would really be 1.9 and 2.1. But overall, yes, for a few reasons, fiscal policy is going to be supportive. And as I mentioned, AI spending will continue. The consumer continues to spend. So it looks like the baseline would be solid growth next year.
Steve.
Thank you, Mr. Chairman, for taking our questions here. You had previously described rate cuts in terms of a risk management framework, and kind of following up on what Howard was asking, is the risk management phase of rate cuts over here, and have you taken out sufficient insurance, I guess, against potential weakness in terms of the data we might get next week when it comes to employment?
So we're going to get a great deal of data between now and the January meeting, and I'm sure we'll talk more about that. And the data that we get are going to factor into our thinking. But yes, we have, if you go back, we held our policy rate at 5.4% for more than a year because inflation was high, very high, and unemployment in the labor market was really solid at that point. So what happened is over last summer of 24, inflation came down, and the labor market began to show real signs of weakness. And so we decided, as our framework tells us to do, that when the risks to the two goals become more equal, you should move from a stance that favors really dealing with one of them, in that case inflation, to a more balanced, more neutral setting. And so we did that. We did some cutting, and then we paused for a while to work our way through what was happening in the middle of the year. And then we resumed cuts in September, and we've cut now 3. We now cut a total of 175 basis points. And as I mentioned, we feel like where we're positioned now we're well positioned to wait and see how the economy evolves from here.
If I could just follow up on the SEP, you have a whole lot of big increase in the growth numbers, but not a big decline in the unemployment numbers. And is that an AI factor in there? What is going on in terms of the dynamic of you get more growth, but you don't get a whole lot of decline in unemployment? Thank you, sir.
So the implication is obviously higher productivity. And some of that may be AI. It just also, I think, productivity has just been almost structurally higher for several years now. So if you start thinking of it as 2% per year, you can sustain higher growth without more job creation. Of course, higher productivity is also what enables incomes to rise over long periods of time. So it's basically a good thing. But that's certainly the implication.
Thank you. Colby Smith with the New York Times. Today's decision was clearly very divided. It wasn't just the 2 official dissents against a cut, but there were also soft dissents from 4 others. And I'm just wondering if this reluctance from several people to support recent reductions suggests that there is a much higher bar for cuts in the near term. And what exactly does the committee need to see if things are well positioned right now to support a January reduction?
Sure. So let me just say, as I mentioned, and as I've mentioned here before, the situation is that our 2 goals are a bit in tension, right? So interestingly, everyone around the table at the FOMC agrees that inflation is too high and that we want it to come down, and agrees that the labor market has softened and that there's further risk. Everyone agrees on that. Where the difference is how do you weight those risks, and what does your forecast look like, and where do you, ultimately where do you think the bigger risk is, and you know, it's very unusual to have persistent tension between the 2 parts of the mandate, and when you do, this is what you see, and I think it's actually what you would expect to see, and we do see it. Meanwhile, the discussions we have are as good as any we've had in my 14 years at the Fed. They're very thoughtful, respectful, and you just have people who have strong views, and you know, we come together and we reach you know, a place where we can make a decision. We made a decision today. We had, you know, 9 out of 12 supported it, so fairly broad support. But it's not like the normal situation where everyone agrees on the direction and what to do. It's more spread out, and I think that's only inherent in the situation. In terms of what it would take, you know, we all have an outlook in terms of what's going to come, but I think ultimately having cut 75 and, you know, the effects of the 75 basis points will only begin to be coming in. As I've said before a couple times, we're well positioned to wait to see how the economy evolves. We'll just have to see. And we will get, as you know, quite a bit of data. I should mention on the data, as long as I'm talking about it, that we're going to need to be careful in assessing, particularly the household survey data. There are very technical reasons about the way data are collected in some of these measures, both in you know, inflation and in labor, in the labor market, so that the data may be distorted and not just sort of more volatile, but distorted, and that's really because data was not collected in October and half of November. So we're going to get data, but we're going to have to look at it carefully and with a somewhat skeptical eye by the time of the January meeting. Notwithstanding that, we will have a lot of the December data by the time of the January meeting. So we expect to see a lot more, but I'm just saying that what we get for example, CPI or for the household survey, we're gonna look at that really carefully and understand that it may be distorted by very technical factors.
And just one more question on dissents. I mean, you talk about it in a very positive way, just given the complicated nature of the situation we're in economically. But is there any point in which those dissents become counterproductive, either to, you know, the Fed's communication and the messaging around the policy path forward?
I don't feel that we're at that point at all. I don't. I would say, again, these are good, thoughtful, respectful discussions, and you hear people say, and you hear many outside analysts say the same thing. I could make a case for either side. I mean, I could make that case. It's a close call. We have to make decisions, and we always hope that the data will give us a clear read. But in this situation, you have competing. If you look through the SEP, you'll see that a very large number of participants agree that risks are to the upside for unemployment and to the upside for inflation. So what do? You've got one tool. You can't do two things at once. So at what pace do you move? What size moves do you make, and that kind of thing? And what's the timing of them? It's a very challenging situation. I think we're in a good place to, as I mentioned, to wait and see how the economy evolves.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, there's been some discussion recently of the 1990s. In the 1990s, the committee did two discrete sequences of 3 quarter-point cuts, one in 1995-96 and one in 1998. And after both of those, the next move in rates was up, not down. With policy now closer to neutral, is it a foregone conclusion that the next move in rates is down, or should we think of policy risks as genuinely two-sided from here?
So I don't think that a rate hike is anybody's base case at this point, and I'm not hearing that. What you see is some people feel we should stop here and that we're at the right place and just wait. Some people feel like we should cut once or more this year and next year. But when people are writing down their estimates of policy of where it should go, it is either holding here or cutting a little or cutting more than a little. So I don't see the base case as involving that. So of course, a data set of 2, now 3, is not a big data set. But you are right about those 2 3-cut times in the 90s.
If I could follow up, the unemployment rate has been rising very gradually for the better part of 2 years, and indeed the statement today no longer describes the unemployment rate as remaining low. What gives you confidence it won't continue rising in 2026, especially when housing and other rate-sensitive sectors still appear to be feeling restrictive policy from the notwithstanding the 150 basis points in cuts prior to today?
So I think the idea is that with now having cut 75 basis points more now and having policy, I'd call it in a broad range of plausible estimates of neutral, that will be a place which will enable the labor market to stabilize or to only tick up 1 or 2 more tenths, but we won't see, any kind of a sharper downturn, which we haven't seen any evidence of at all. At the same time, policy is still in a place where it's not accommodative, and we feel like we have made progress this year in non-tariff related inflation, and as tariffs come through, as they flow through, that'll show through next year. But as I said, we're well placed to wait and see how that turns out. That is our expectation, but we're going to start to see the data, and it'll tell us whether we were right or not.
Claire.
Claire Jones, Financial Times. A lot of people interpreted your comments at the October meeting that, when there's a foggy situation, we slow down, to mean that, there wouldn't be a cut now, there'd be a cut in January instead. So it'd be good to get a sense of why did the committee decide to move today rather than to move in January instead? Thank you.
Right. So in October, I said that there was no certainty of moving, and that was indeed correct. I said it's possible you could think about it that way, but I was careful to say other people could look at it differently. So why did we move today? I would say point to a couple things. First of all, gradual cooling in the labor market has continued. Unemployment is now up 0.3 from June through September. Payroll jobs averaging 40,000 per month since April. We think there's an overstatement in these numbers by about 60,000, so that would be negative 20,000 per month. And also, just to point out one other thing, surveys of households and businesses both show declining supply and demand for workers. So I think you can say that the labor market has continued to cool gradually, maybe just a touch more gradually than we thought. In terms of inflation, it's come in a touch lower, and I think the evidence is kind of growing that what's happening here is services inflation coming down, and that's offset by increases in goods, and that goods inflation is entirely in sectors where there are tariffs. So that does build on the story, and so far it's only a story, that that the goods inflation, which is really the source of the excess at this point, almost more than half the source of the excess inflation is goods, is tariffs. And you've got to say then, so what do we expect from tariffs? And I would say that is to some extent down to looking for broader economic heat. Do we see a hot economy? Do we see constraints? Do we see what's going on with wages? You saw the ECI report today. It doesn't feel like a hot economy that wants to generate, Phillips curve kind of inflation. So we look at all those things, and we say that this was a decision to make. It obviously wasn't unanimous, but overall that was the judgment that we made, and that's the action we took.
And just on the ample reserves point, how concerned were people around the table about some of the tensions we've seen in money markets? Thank you.
I wouldn't say concerned. So what really happened is this. Balance sheet shrinkage, sometimes called QT, went on. We had a framework in place for monitoring it, and nothing happened. The overnight reverse repo facility went down pretty much close to zero. And then beginning in September, the federal funds rate started to tick up within the range, right? And it ticked up almost all the way to interest-on reserve balances. There's nothing wrong with that. What that's telling you is that we're actually in reserves, in an ample reserves regime. So, we knew this was going to come. When it finally did come, it came a little quicker than expected, but we were absolutely there to take the actions that we said we would take. So, and those actions are today. So, we announced that we're resuming reserve management purchases. That is completely separate from monetary policy. It's just we need to keep an ample supply of reserves out there. Why so big? The answer to that is, if you look ahead, you'll see that April 15th is coming up, and our framework is such that we want to have ample reserves even at times when reserves are at a low level temporarily. So that's what happens on tax day. People pay a lot of money to the government, reserves drop sharply and temporarily. So this seasonal buildup that we'll see in the next few months was going to happen anyway. It was going to happen because April 15th is April 15th. There's also a secular ongoing growth of the balance sheet. We have to keep reserves, call it constant as it relates to the banking system or to the whole economy. And that alone calls for us to increase about $20–25 billion per month. So that's a small part. That's going on. It's also happening in the context of a temporary few-month front loading to get reserves high enough to get through the tax period in mid-April. So that's what's happening there.
Andrew.
Thanks, Mr. Chairman. This is the last post-FOMC press conference before an important Supreme Court hearing next month. Can you talk about how you're hoping the Supreme Court will rule? And I'm just curious why the Fed's been so reticent on such a pivotal matter.
It's not something I want to address here, Andrew. We're not legal commentators. It's before the courts, and we think we don't think that we help matters by trying to engage as a public discussant of that. I'll give you a mulligan, though.
No, thanks. I don't know if that means I get 3 questions, but
no, just one more.
I guess I wanted to come back to the 1990s question, and like, do you see that as a useful model for thinking about what is happening in the economy right now?
I don't think it rises to that level. So I did think that in 2019, where we cut 3 times, but this is such a unique situation. It's not the 1970s, let's put it that way, but we do have tension between our 2 goals. And so that's just unique in my time at the Fed, and I think going back a long ways, we haven't had that. In our framework, our framework, as you know, says that when that's the case, then we try to, take a balanced approach to the two things, and we look at how far they are and how long it would take to get them back to each of them back to the goal. And that's a very subjective analysis, really. But it just tells you you've got to, and I think ultimately what it says is when they're broadly equally threatened or equally at risk, you should be kind of neutral. Because if you're either accommodative or tight, you're favoring one or the other goal. And so we've been sort of moving in the direction of neutral. Now we're in the range of neutral. We're in the high end of the range of neutral, I would say, and that's what we're doing now. It so happened that we've cut 3 times. That we haven't made any decision about January, but as I've said, we think we're well positioned to wait and see how the economy performs.
Edward.
Thanks, Mr. Chairman. Edward Lawrence with Fox Business. I wanted to ask you, the inflation expectations has come down in your SEP report. Do you see the tariff price increases as passing through in the next 3 months? Is it a 6-month process that we're looking for that to end? And then because of that, is jobs the threat to the economy?
So with tariff inflation, there's the announcement of a tariff, and then they start to take effect, and then it takes some months. Goods may have to be shipped from other parts of the, it may take, quite a while for an individual tariff to take its full effect. But once it's had that effect, then the question is, isn't that just a one-time price increase? So we actually look at it, all of the announcements and what you get from all that. You see sort of for each one of them, there's a time period, and then it's fully in. So if there are no new tariff announcements, and we don't know that, but let's assume there are no major new tariff announcements, inflation from goods should peak in the first quarter or so, right, or roughly. We haven't been able to predict this with any precision. No one is. But call it the first quarter or so of next year should be the peak. And from here, it shouldn't be big. It should be a couple tenths or even less than that. We don't really have precision on this. And after that, again, if there are no new tariffs that are being announced that will take 9 months to get fully in, and 9 months is also an estimate, then you should start to see that coming down in the back half of next year.
And I want to see if I could address sort of the elephant in the room. The president's been talking openly about a new Fed chairman. Does that hinder your current job right now or change your thinking at all?
No.
Mike.
No mulligans for it. Michael McKee from Bloomberg Radio and Television. 10-year rates are 50 basis points higher than when you started cutting back in September of 2024, and the yield curve basically has been steepening. Why do you think that continuing to cut now, especially in the absence of data, is going to bring down the yield on the thing that will move the economy the most?
So we're looking at the real economy and focusing on that. And you've got when the long bonds move around, you've got to look at why they're moving around. If you look at inflation compensation, it's very that's one part of it is inflation compensation break-evens, and they're at very comfortable levels. They're at levels consistent once you get out past the very short term now. Break-evens are at at quite levels that are quite consistent with 2% inflation over time. So there's nothing happening with rates going up out there that suggests concern about inflation in the long term or anything like that. I mean, I look at these things pretty regularly. Same thing with surveys. Surveys are all saying that the public understands our commitment to 2% and expects us to get back there. So why are rates going up? It has to be something else. It must be, an expectation of higher growth or something like that. And that's a lot of what's been going on. I mean, you saw a big move, toward the end of last year, which was not to do with us. It was to do with other developments.
Well, you just mentioned that the public is expecting you to get back to 2%, and Americans overwhelmingly are citing high prices, inflation, as their number one concern. Can you explain to them why you're prioritizing the labor market, which seems relatively stable to most people, instead of their number one concern, inflation?
So we, as you know, we have a network of contacts in the U.S. economy, which is really unmatched if you go through the 12 reserve banks. So we hear loud and clear how people are experiencing really costs. It's really high costs. And a lot of that is not the current rate of inflation. A lot of that is just embedded higher cost due to higher inflation in 2022 and 23. So that's what's going on. And so the best thing we can do is restore inflation to its 2% goal, and our policy is intended to do that, but also have a strong economy where real wages are going up, where people are getting jobs and earning money, and we're going to need to have some years where real compensation is higher, it's positive, significantly positive, so nominal wages are higher than inflation, for people to start feeling good about the affordability issue. And, so we're working hard on that. We're trying to keep inflation under control, but also support the labor market and strong wages so that people are earning enough money and feeling economically healthy again.
Victoria.
Hi, 𝗕𝗓𝗪𝗏 with Politico. Just to follow up on that, I mean, this is now the third time that you've cut this year and inflation is around 3%. So is the message that you're sort of trying to send with that you're okay with where inflation is for now, as long as people understand that at some point you still want to get back to 2% because inflation is relatively stable where it is?
Everyone should understand, and the surveys show that they do, that we're committed to 2% inflation, and we will deliver 2% inflation. But it's a complicated, unusual, difficult situation where the labor market is also under pressure, where job creation may actually be negative. Now, supply of workers has also gone way down, so the unemployment rate hasn't moved that much. But, it's a labor market that seems to have significant downside risks. People care a lot about that. That's their jobs. That's their ability, if they get laid off or if they're entering the labor force, to find work. So that's really important to people. The story with inflation, and we're well aware that this is a story at this point, is that if you get away from tariffs, inflation is in the low 2s, right? So it's really tariffs that's causing most of the inflation overshoot. And we do think of those as likely to, in the current situation, as likely to be a one-time price increase. Our job is to make sure that it is, and we will do that job. But right now, you've got this difficult balance, and there are risks to both sides. There's no risk-free path. If it was just inflation and the labor market was just really strong, and then rates would be higher, as they were for more than a year. We didn't have to worry about inflation. Sorry about the labor market, because the labor market unemployment was very low. If you remember when inflation was very high, there was a labor shortage, so we could focus entirely on inflation. Now it's different. We actually have risks to both. And I think we're doing the best we can for people. They also care about their jobs. They do care about affordability. And the best thing we can do there is both to support economic activity, but also, make sure that when tariff inflation goes down and disappears, inflation lands around 2%.
Elizabeth.
Thanks so much, Elizabeth Schulze with ABC News. Just to follow up, you keep talking about job growth being negative. Why do you think job growth is so much worse than some of the official data? Why do you think job growth is, to follow up on your comments about job growth, why is it so much worse than the official data is suggesting?
Oh, well, we know, I think I don't think this is particularly controversial. It's very difficult to estimate job growth in real time. They don't count everybody. They have a survey. And there's been something of a systematic overcount. And so we expected, and they correct it twice a year. So the last time they corrected it, we thought the correction would be 800,000 or 900,000. I won't get the numbers exactly right. And that was exactly what happened. So we think that has persisted. And so there's an overcount in the payroll job numbers, we think, continuing, and it will be corrected. I don't have the exact month in my head right now, and that's just, I think forecasters generally understand that. So, and we think it's about 60,000 a month, so 40,000 jobs could be negative 20, and that could be wrong by 10 or 20 in either direction. But in any case, but the thing is, that's job creation in a way. That's demand. Labor supply has also come down quite sharply. So, if you had a world where there's just no growth in workers and you really don't need a lot of jobs to have full employment, some people argue that's what we're looking at. But I think a world where job creation is negative, I just think we need to watch that situation very carefully and be in a position where we're not, pushing down on job creation with our policy.
When we're talking about supply, we have seen major American employers like Amazon cite AI in job cuts. How much right now are you factoring in AI into the current weakness in the job market?
So it's probably part of the story. It's not a big part of the story yet. We don't know whether it will be. But, for example, if you look at, you can't miss the big announcements of layoffs and also companies saying that they're not going to hire anybody for a long time, and they cite AI. That's all clearly happening. At the same time, people are not filing for unemployment insurance, and since job creation, job finding rates are extremely low, if there were big numbers of layoffs, you'd expect the continuing claims to go up, and you expect new claims to go up. But really haven't much, so it's a little bit curious. But longer term, though, the question is, what are we going to see here? And we don't know, but it's it may be that in past technology, really significant technology innovation eras, you have seen some jobs destroyed and other jobs made. Ultimately, what's happened for a couple hundred years is when you get through all that, you have higher productivity and you have new jobs, and there are enough jobs for people. This may be different. It's every time we have a wave of technology, we think, oh, this could put a lot of people out of work. What are they going to do? In the past, there's always been more work and higher productivity, and incomes have risen. What will happen here, we're going to have to see. But right now is such early days. We don't think we see much. It's certainly not showing up in layoffs yet.
Thank you, Chair. Enda Curran, Bloomberg News. Given the breadth of views on the policy committee, why is there such a division of views between
on the policy what? On
the committee.
Thank you.
Why is there such a division of views between the presidents and the board members?
It's not so stark as that. The views are more varied on in each group as well. There's some of that, but I would say they're also governors and they're people on both sides in both groups. I wouldn't put too much in that.
Okay, and just to follow up, please, given your growth upgrade, how would you factor in, or what would be the economic impact if the Supreme Court is to strike down the tariffs that they're currently hearing, please, in terms of growth and inflation? Thank you.
I really don't know. It would depend. It would depend on a whole bunch of things we don't know. So I can't really help you there.
Christine. Thank you.
Thank you, Chair Powell. Christine Romans, NBC News. I wanted to ask you about how the higher income households are really driving spending right now. They're backed by home equity and stock market wealth, but lower income consumers are really struggling with the accumulation of 5 years now of rising prices. It's price levels, not really the inflation rate, holding some of these families back. How sustainable is this so-called K-shaped economy, and what are the Fed's thoughts on whether that's a risk going forward?
So we do, through our vast network of contacts and just through our observation of what's going on in the economy, we hear about this a lot. If you listen to the earnings reports for consumer-facing companies that tend to deal with low and moderate income people, they'll all say that we're seeing people, tightening their belts, changing products that they buy, buying less, and that sort of thing. And so it's clearly a thing. It's also clearly a thing that, asset values, housing values, and securities values are high, and they tend to be owned by people more at the higher end of the income and wealth. So as how sustainable it is, I don't know. Most of the consumption does happen by people who have more means. I think the top third accounts for way more than a third of the consumption, for example. So it's a good question how sustainable that is. The best we can do is to have a price stability and a strong labor market. And what we saw, for example, what we saw at the end of the very, very long expansion that ended with the outbreak of the pandemic, we saw that it was 10 years and 8 months or something like that, the longest one in recorded history. In the last 2 years, most of the largest part of the wage gains were going to people in the bottom quartile, the bottom part of the low and moderate income. So, you know, having a strong labor market for a long period of time is really, really good from a social standpoint. It's helping people at the lower income levels, and that's what we all want to get back to. But we got to have price stability, and we got to have you know, full employment, maximum employment.
And just quickly, you mentioned the housing market remains kind of weak. With these rate cuts that we've seen, is there a chance we're going to see more affordability in the housing market so more people can maybe enjoy that part of wealth creation? I mean, the average age or median age of a first-time home buyer is now 40 years old. That's the highest on record.
Yeah, so the housing market faces some really significant challenges. And I don't know that, you know, a 25 basis point decline in the federal funds rate is going to make much of a difference for people. You know, housing supply is low. Many people have very, very low rate mortgages from the pandemic period, and they kept refinancing and caught the really low. So it's made it expensive for them to move. And, you know, we're a ways away from that changing. Also, we haven't built enough housing in the country for a long time, and so a lot of estimates suggest that we just need more housing of different kinds. So housing is going to be a problem, and you know, really the tools to address it are we can raise and lower interest rates, but we don't really have the tools to address, you know, a secular housing shortage, a structural housing shortage.
Chris.
Thanks. Chris Rugaber, Associated Press. You mentioned on inflation, services inflation being low, goods inflation looking like maybe it'll peak. We had the wages report you mentioned today showing moderating wage growth. Where are the inflation risks? It looks like inflation is cooling, in your view. At the same time, you have potentially negative hiring. Why not? Why aren't we hearing more about maybe more cuts in this environment?
Well, I think the risk in inflation is pretty clear to see, and that is, you know, we see higher inflation. As I mentioned, most of the inflation over target is from goods, and we estimate, we expect, most of us, that inflation will be a one-time price increase and then come down. We just came off an experience where inflation turned out to be much more persistent than anyone had expected. Is that going to happen now?
We're pumping.
You know, that's the risk. The risk is either that tariff inflation just turns out to be more and more persistent, maybe because companies who are now holding back from passing through the tariffs will just keep doing that. So you see that. I think the other possibility is less likely, and that is just that you know, the labor market gets tight or the economy gets tight, and you see, you know, just traditional inflation. I don't see that as particularly likely. But so I think, you know, again, you know, all across the committee, people see the picture pretty similarly, but see the risks quite differently. And some people do see the inflation risk, and I wouldn't dismiss that case. I don't dismiss that case, but you've got to make an assessment, and this is the assessment we made.
Hi, Chair Powell. Neil Irwin with Axios. So this has come up a couple of times today, but to be clear, do you believe that we're experiencing a positive productivity shock, whether from AI or policy factors or whatever? And how much is that driving the higher GDP projection in the SEP?
So yeah, I mean, I never thought I would see a time when we had, you know, 5-6 years of 2% productivity growth. This is higher. You know, this is definitely higher, and it was before it could be attributed to AI. I also think if you look at what AI can do, and if you use it in your personal life, as I imagine many of us have, you can see the prospects for productivity. I think it makes people who use it more productive. It may make other people have to find other jobs, though. So it could have productivity implications while also having, social and labor market implications that we don't have the tools to deal with. But yes, I think we're definitely seeing higher productivity. I think it's a little quick to be saying it's generative AI, but I don't know. The pandemic may have induced people to do more automation and do more things with computers to replace people, and that raises productivity, output per hour.
Does that imply a higher neutral rate, and therefore the policy might be a little easier than it seems?
All things equal, yes, but all things aren't equal. There are many things pushing in different directions on where the neutral rate would be. But yes, that argument does come up.
Matt Egan.
Thanks, Chair Powell. Matt Egan with CNN. After today, you only have 3 more meetings at the helm of the Fed. Since becoming Fed chair, you've seen multiple trade wars, the pandemic, COVID reopening, period of high inflation. I know your term's not up as chair until May, but I'm wondering if you've given any thought to what you want your legacy to be.
My legacy. My thought is that I really want to turn this job over to whoever replaces me with the economy in really good shape. That's what I want to do. I want inflation to be under control, coming back down to 2%, and I want the labor market to be strong. That's what I want. And all of my efforts are to get to that place. They have been all along, but ultimately, that's what I'm. And it's I don't have time to think about bigger things. I hope many years ahead to worry about that, but there's enough to do.
Relatedly, have you given any more thought, and can you tell us any more about your plans on whether or not you plan to stay on the Fed Board of Governors even after your term as chair expires?
Again, I'm focused on my remaining time as chair. I haven't got anything new on that to tell you.
Go to Mark for the last question.
Chairman, Mark Hamrick with Bankrate. Even while many price levels remain elevated, the reductions in the federal funds rate means that savings rates, or yields to be more precise, have peaked, while key borrowing rates remain elevated. And that's, as we've discussed here, as many Americans struggle with liquidity or emergency savings challenges. Is that just collateral damage or an unintended consequence because your tools are limited in addressing individual or household liquidity constraints, insufficient money in the bank?
I don't know. I wouldn't agree that that's collateral damage of our. I mean, over time, we do what we do in order to create price stability and maximum employment, and those things are hugely valuable to all the people we serve. When we raise rates to bring inflation down, that does work by slowing the economy, but we've moved back our policy back down to where it's certainly not strongly restrictive at this point. I think it's sort of in the range of neutral. So that's what we're trying to do, and I would want people to understand that. I think what people are feeling is the effect of higher prices. There was a global wave. Sort of every large economy in the world, every large open economy, market-based economy in the world had a wave of inflation that looked an awful lot like ours. We actually came through better than any other country, substantially better. We had higher growth, we had better labor market, and this is really due to the American economy. We have an extraordinary economy, and people are innovative, they work hard, and so all of us who work in economics jobs are really fortunate to have the U.S. economy. So, thank you very much.
Well. Yeah. Let me quickly put my boy on. There we go. I think they can hear you. Let me quickly.
Well. Indeed. Our man, Jerome Powell. Well, I think it's quite clear, for once, what the bias is towards the next rate decision. He, repeated himself numerous times that right now the sentiment looks that we will have no change at all for the next rate decision. Of course, with the sensitive data that is coming up quite soon, things might change, but the outlook right now definitely looks neutral. And we actually saw a nice crypto bump, especially on the 1 minute chart. However, we already saw some corrective moves in, unfortunately. However, I'm still sticking with my initial conclusion that this squeeze is gonna come to an end and we're gonna see an impulse. So my prediction stands that we're gonna move up towards the 200 EMA, could go down somewhere to around 228, and then we will see further what price is doing. But
you have that in your chart, by the way?
What do you think, Dusty?
Wait,
say again?
Are you talking about XRP? Are you talking about XRP here, about Bitcoin? What do you think?
Yeah, I'm talking about XRP. Apologies there, it was not clear. I'm specifically talking about XRP. Now, if we move back to Bitcoin, and I am actually using, because I think it's more reliable, the BONK chart. So let's take it right over there. And remember, guys, we had the two scenarios. Scenario one is that we're actually going to make another low right here. And scenario one is actually that wave 3 finished somewhat earlier. Correction 4 has already been made. And the current low that is here is actually the final low of the massive correction before we're gonna see another pump. So that being said, as things are looking right now, I am actually favoring scenario 1. Why? Because there has been a clear rejection right here. We basically moved in this massive important support zone. We had an impulse, a correction to retest the zone. Basically, we didn't quite touch it, but you can count it as a retest. Then we continued upwards. So right now, I am definitely favoring scenario 1. Also, Bitcoin hasn't seen the 200 EMA for quite some time. So that being said, I am still anticipating further bullish sentiment. Now, when it comes to Ethereum, which is actually one of the only crypto that have been pumping a little bit harder, because we are almost here at the 200 EMA at the exact same
Let me
time
stop
frame.
you for just a second. Let me just stop you for just a second. Boys and gal and everybody, actually, if you're watching the stream right now, make sure you press that like button, by the way. And more importantly, if you're not yet subscribed to the channel, I ask you, why not? We're streaming on here every single day, talking about the coins, talking about prices, talking about everything. And I honestly, not financial advice, believe that over a few month time span, some crazy things are going to be seen. And also, the reason I'm saying that quite often really is because if I take a look, for example, at just our free Telegram group, again, link is in the description, absolutely free. If you look at the results we've been able to get in there over the past few weeks or so, which again, take a look at it for yourself. All you need is a Telegram account and a BLOFIN account is absolutely insane. And if you want to make a BLOFIN account separately, you can also just do it with the link down below here. Just look for your user ID and that's basically all you need. I'm telling you right now, it's been absolutely crazy and we're only going to be adding more and more things in there, which again is absolutely free. Recommend you guys to check it out. First, link in the description down below. And like I said before, we're going to be streaming here every single day. So if that's something you're interested in, make sure you press that subscribe button and I'm going to let you continue on with your analyses.
Yes, indeed. And I would like to further add on that is that from this month onwards, we're also going to implement some live trading on BLOFIN in the stream.
Yes,
and it
sir.
will be absolutely free indeed. So it's going to be completely transparent. We're not going to do any crazy tricks or whatever, because there are streamers right there who do some weird stuff with the live streaming to make it appear that it is live, but it's actually pre-recorded. We're not going to do any of that. and we're gonna actually get some very good results in there. All right, so to continue with Ethereum, as I said, I still anticipate XRP and Bitcoin, including Ethereum, to reach that 200 EMA level. Ethereum is actually quite close because we pumped actually more aggressively on Tuesday up until now. And even today we had quite a bump on Ethereum compared to Bitcoin and XRP, which were quite lacking behind. So as we can see, Ethereum is already quite close to the 200 EMA, which is a great indication because we've only focused on XRP and Bitcoin thus far, but including, again, Ethereum is also heading there. So that is all good news. And if we further zoom out, let me just take the chart over here. We see that Ethereum, actually, you know what? I actually want to take a huge zoom out. I'm going to remove everything from the chart for a second just to clear things up. Let's actually grab 1 week. So how are things looking right now? When you look at it from a bigger time frame perspective, let me just zoom it up a little bit, and we'll take our Fibonacci, and it's actually not doing what I want it to do. Let's fix that later. So how things are looking is that we have this huge support zone over here, which actually fueled this huge impulse, which created this nice juicy high over here. And we're actually pulled back into that quite optimistic support zone. And that's actually where we are bouncing off from right now. So it is indeed a great zone, which we could say that it could definitely fuel the next cycle upwards. And if you zoom out, we've talked about this before also, you can see that the correction, it's just tickling down. It's nothing aggressive like a huge bar down, up, and then another huge impulse down. It's like very, very neutral the way we've been going down. Yes, it's still a huge correction because it's around, 47%, which is indeed massive, of course. But for me, it's more important the way that he's been going down, the way the candles look like. And it's still looking like a typical correction. And then the retest here in the support zone, and then the impulse that we are anticipating indeed. So that is that. Let me just grab the comments in here and my chart. Are there any specific questions in regards to XRP, Ethereum, or Bitcoin?
In the meantime, I'll actually show this, by the way. I've not looked at my bots for a while. And I actually expect them to all be doing bad here. You can see, by the way, how Bitcoin has been doing during the FOMC. It's been interesting, the backward. This is a 50-minute chart. Go from what? 91.6 just, yeah, this is, wait, this is yesterday, no? No, this is today. So this was 11. So when the rate came out, we were actually at 91.6. We've actually gone up in this little span of time, like about $2,800 or so. So almost $3,000 in just this little time span of an hour and a half? Something like that, hour and a half? So that's actually pretty freaking insane in my opinion. And besides that point, if I scroll down here a little bit, I expected my bots to be doing way worse. So the Solana here is running pretty positively, actually, since we opened it up roughly 16 days ago. XRP, over the past 60 days, we've been able to cash out roughly $10,000. So roughly 20% or so over a year will be about 114%, which is pretty good, even though we're down tremendously. You might not understand, but it's because our average XRP entry is about 230 or something like that. So that is why this looks down, but give it some time and I think we should be good. This one is running at a bit of a loss. And if you look at this, let's see here. Two bots, I think Ethereum and Bitcoin are also, I guess ooh, this is interesting as well. Even though we're down from where I opened it, or actually where I most likely averaged into it, We already cashed out 35% over the past, like what, a little bit over half a year, which again brings us to even a 60% return just on Bitcoin, which is funny because you'd expect it to be way lower based on the idea that we're back at exactly the same spot, which is why sometimes these bots can be way nicer than just having a position open. But that again depends. Are you a short-term trader, a long-term trader? For a lot of the stuff we're going to be showing soon, it's going to be very much short-term trades. So potentially, a few hours, few minutes, or a few days, who knows, right? Depends on exactly the opportunity that arises. We'll talk about that shortly. But for a lot of the people that have no freaking idea, bots can also be nice. And again, there's no real action you need to take. It's just kind of letting it go after you've set up the settings for it. But again, hopefully there will also be some more copy functionalities for our strategies. For right now, however, if you're looking for a place to trade, check out the first link in the description down below, which is Telegram. But there's also other links, of course. Having said that, I've been looking at the market here a little bit, and it's kind of interesting how nothing has really essentially changed in the past, what can we say, few hours? Because we expected this number to come out already, and realistically, he didn't really say anything we did not expect. I did not expect him to say that, oh, we're going to cut rates by something crazy soon or anything of that sort. Yet there's still this very much upward bias. Like, for example, right now, why did we jump to 94.5 thousand? What is making this rise happen? Like, what is that specific part causing this to happen? Is it just that people are excited for his words? I don't think so. So what exactly is it? And I mean, maybe in the charts, you've seen something there that explains this. But to me, just looking purely at it from a, I guess let's call it news type perspective, it doesn't make that much sense. Why the pump and dumps throughout here? Why the price action? Why this? Why such heavy pump based on no news? And even if we call it news, it was quite neutral, if not potentially quite negative, because he didn't say we're going to go for a crazy cut spree.
Yeah, I agree. But at the beginning, I found that he answered really well in a way that it showed that that there perhaps might even be an increase. That's the energy he gave off and how he answered the questions. But later on, he really made clear that right now the bias is neutrality and no further perspective as of now. Of course, a lot of data still needs to come in. But as of now, the bias is neutrality. And especially after he said that he doesn't, the problem is unemployment and inflation. And he said that he doesn't want to favor one of the two. So if we just zoom out and say, okay, well, he cut rates by, I think, 1.75% this entire year, correct? Something like this.
Let's see here. So throughout the year, I guess it depends. You mean 2025 as a year or last rolling year? Because let's see here. We started at, so the year, we started at 4.5. And so we're down now tremendously. So only 0.75. But since the cutting started, he means, we started at 5.5. So from that perspective, we're down 1.75.
Yeah. So, and at least the last 3 meetings have all been rate cuts. So if he then says afterwards during the FOMC meeting, he said, well, we don't really want to favor one of the two. We're going to keep things balanced. So from that perspective, it makes sense that he's not going to, push for another rate cut for now. Hence the neutral bias that he showed off later in the meeting. And I think that's a little bit interpreted from the chart as well. I think that's the reason why we jumped up and down a little bit, and yeah, but again, it's so hectic. Sometimes it doesn't even make sense what happens on the chart, But again, that's my interpretation of how he answered those questions. By the way, am I the only one who, really don't like some of the questions that journalists are asking? Because some journalists have a question beforehand, and if somebody else asks almost the same question like before them, they don't really change it. They just ask it in a different way, and they still get the same answer. I think that's not really what a journalist is supposed to do, But that's my take on that. But
I guess for your own paper, you might want to have a specific thing asked, because if they're all reporting it over on their website, you can have a little bold text with a question and the answer.
Yeah, but still, it sounds rather unprofessional because he's just going to answer almost the exact same way as before.
But to be honest, hey, let's real talk here, man to man. I honestly don't think these meetings are that interesting because most of the time it's like a nothing burger. I mean, now he kind of like faked us out a little bit, give us a little one of those, for real. But generally speaking, I mean, do I really learn that much new stuff? Not that much. You just kind of dance around with his words, saying kind of nothing with a whole lot of them, right? He's putting out 1,000 freaking words, saying what really?
I agree with that, but the thing is still, you say, well, most of the time it's a nothing burger, and the problem is, I think most people are not going to take that risk that one time where he just goes like ballistic and just throws out a crazy conclusion, and then we have because that has happened before in the past as well, where he just comes up with a crazy line and the market goes absolutely ballistic, and I guess that's why we keep coming back to this and continue, to listen to the meetings.
We can never leave the circus. We can never leave the circus. We can never leave this.
Absolutely not. Glued to my chair.
Unfortunately, this will be our way forever. I mean, it's kind of fortunate if you think about it.
Of course. We have Pat Vick. Dusty brings the vision. Arnold brings the determination. Together they remind you, trust the process and keep pushing forward.
That's like the most ChatGPT type of thing I've ever seen.
Absolutely not. That's 100% human written. You pessimistic doomer, you.
That comes from Pat's heart of the Netherlands.
Exactly.
I appreciate that,
Pat.
Respect to you, brother. Yeah, and for today, our outlook, I mean, I'm going to say there was already some pretty good volatility. I'm kind of happy. Like, all we were talking about before was I expect some volatility. There's no real direction. If I could pick a direction, it was slightly upwards. And we've done exactly that. I mean, on the exact start of the meeting itself, it was kind of like a little bit more of a fake out, like I'm going to call it. But at the end, we are still continuing upwards for XRP, continuing upwards for BTC as well, ever since it's
still a bit sideways, but again, my bias will be still bullish, definitely. So keep an eye on that 200 EMA. I think that is going to be the minimum target for.
I mean, sideways, we're up 1.15% on BTC from the start of the meeting. From that, it's actually
what time frame is that?
This is a 1 minute chart.
I mean, if you zoom out on 5 minutes or 10 minutes, that's just sideways action. It's not really. You could call it a fake out for now because the momentum has ceased.
I agree to that. On the contrary, I mean, if we take a look at from top to or bottom to top, 3% move, almost $3,000, and for XRP as well, let's take a look. It is still relatively a pretty big move of about 7.5 cents, 3.6% in an hour or something like that. It is a pretty interesting move.
Yeah, but again, bias remains 200 EMA next checkpoints.
Can you show the 200 EMA? Do you have any in your chart right now?
Yeah, definitely. Yeah, perhaps that's unclear for some, but the green candle right here on my beautiful chart is indeed a 200 EMA. Let me just grab Bitcoin. Again, the new Blowfin chart, because I find it a bit more accurate indeed. That's where we are also trading on. So 200 EMA, again, the green line. Of course, it's going to come tickling down a little bit, but try to keep it in mind. That's like the minimum target in my humble opinion. No financial advice, obviously. And for XRP, same story, 200 EMA, which would, most likely be I think around a 10% move, because the line is coming down, obviously. Something between 8 and 10%. It's what I'm still anticipating for December. So that being said, we are still very, very squeezed in. And this can explode during Asia session. This can explode tomorrow. This can explode the day after tomorrow or next week. But sooner than later, we're going to see a massive impulsive action on at least XRP. And of course, I could say it's going to be either bearish or bullish. But of course, I think by now you guys understand that my bias is now indeed bullish. And also, if we zoom out, because I still see this move as the first impulse. Correction A, B, C, D, E. correction phase has ceased, and now time for the impulsive super cycle to continue. So again, if you are really focused on XRP, keep an eye out on this price action, this squeezing that is happening as of now, because it's going to be crucial. And again, for those who haven't heard it, what's mostly happening, and we can just take another example as well. We can even take this example over here. When price is going sideways, it's charging up for the next move. And then we have a huge impulsive action, as we saw here. You can find it also here, sideways action. These candles will go up and down, up and down, up and down. You can find it anywhere on your chart. And perhaps it's something interesting that you can implement in your trading strategy as of now. So I would say take a look and try to find these sideways moments, because usually after it's finished, we're going to see that impulsive movement, that breakout, or whatever you want to call it. So that is just the tip of the day for you guys, which also applies to the live price action.
All right. And then, lads, I'm going to tell y'all, if you've not done it yet, I'm again going to just quickly say it. The first link in the description down below is the link to our Telegram group, absolutely free. Trades are shared in there. Soon also trades are going to be shared over in the stream here. I'm thinking of how to divide it better, like how we're going to do the streams exactly. Like perhaps if you guys have some ideas, for example, if you prefer to have the news streams and the trading things separately, you can definitely let me know in the comment section down below. Every single comment is always read. You can always send me a message, whatever you want. I mostly look into them. There's a lot though, but if you put it in the comment section, it will for sure be read. Do not worry about that. Even if there's no response, it is being read. Otherwise, send a message in Discord, in the main Discord group, or send a message in that Telegram, the trading Telegram. Then I will also know, of course.
Indeed.
And I
think indeed in Discord, excuse me, Dusty, I think the easiest is Discord, because it's just an open chat. We can all read it. We can all, just get on our phones and easily reply to your questions. So if you haven't joined already, I would say please join the Discord. You can find the technical analysis that I post on Twitter there as well. And yeah, that's it.
I'm actually thinking now, if you guys do any analysis at all, you're into trading, whatnot, share your stuff. We're always happy to see, always happy to discuss. At the end of the day, it's a community type of thing. Meaning if you've got charts you usually make, let us know. Just share them in there. There's a section for it. Share your charts. Matter of fact, I already said before we should do like some weekly giveaways or something like that, just to people in Discord. Especially maybe, I'm thinking out, just the people who share the charts could be something cool as well, right? People are sharing their insights, putting some work in. Yeah, that could be something quite nice. So make sure you check out the Discord. And guys, we shall see you again with a stream somewhere tomorrow, because every single day we're streaming here. And so I say see you very soon. And thank you guys all so much for watching. Make sure you press the like button if you enjoyed it. And make sure, of course, you subscribe for further notifications on whatever we post.
Yes. See you guys in the next one. Get to the chopper!